stocks. I'm just gonna be doing about 2 stocks because it's a short process for me, but for explaining it, it's kind of a long process. So I picked out 2 stocks that I'm gonna go over. So I haven't done any analysis on it yet, um, but let me just show you what I would do. So basically, we're gonna want to look at a bigger picture. I'd say about this range. This is good. You can see the patterns here. You can see um, just a bunch of lines. Honestly, if you're new, that's all you really see is a bunch of lines. So basically, we're gonna break this down. We're gonna see that this is a gap, and we're gonna see that all stocks need to fill gaps. That's something you should write down. Put that in your notes. All stocks need to fill gaps. All right. So after you know this, we could see that it bounced 1, 2. This could be another bounce down, or it could be a breakout. Either or. There's always 2 options with stocks. You're gonna want to look, see resistance at the bottom. So basically, it is making a wedge, and if it's either gonna break the wedge or fall down and come back down to resistance. This wouldn't be the resistance though. It comes down to if you're a conservative trader, that's what you would look for. You would have been in by this candle because it's about there's a lot of bounces here. If you're a conservative trader, you get on the 3rd bounce. If you're an aggressive trader, you get on the 2nd bounce. All right, just to clear that up. So the next resistance would be here. It's the top of these candles. All of them, you can see it. So if this thing were to come down, we could see it come down to about 50, and you get in for the long run to clear the gap. So that would be my analysis on it. It's either going to break and push up to 60 before earnings, or it's going to fall back down, come over here to 50, and then break. So I mean that's basically an easy analysis. That's just on the daily chart. We look on the weekly chart. Weekly looks good. It looks like it could run like this. So weekly looks good. Monthly, it looks like it can go to 54 and then sell off. So we're just gonna be looking at the daily for the position. It could come down, it could break. But yeah, that's basically the technical analysis I would use on Intel. This would be the entry if you understand bottoms. As you see, it bottomed out twice. You always get in on the 2nd bottom. You never get in on the 1st bottom unless you're day trading. Swing trading is different, so you want to get on the 2nd bottom. So that's something you should note as well. Okay, and that's the analysis for Intel. The other stock we're going to look at is Cisco. Now this pattern I'm going to show you is my favorite pattern to use. I post this in my course. I teach people how to use this. I'm not going to teach you the full thing, but this is something that I use in my course. So basically, we're going to want to look. See, there's a gap up here. You see, there's a gap here. There's a small gap here. There's a gap here. There's a gap here. And there's 2 gaps here. Okay. So you're going to look at all the gaps, see what you can find. Now, my best bet is that this goes like this. As you can see, it hits all those pivot points. So yes, that's a gap fill. This is filling this trend right here. So that's a gap fill down. And as you see, it comes from this gap here, and it fills all these pivot points. So you're gonna know, rejects, sell, and then we don't know if this is a reject or a sell until you get the next pivot point, which is right up here. And actually, this thing kind of comes out perfectly. I think I put that in the wrong. So as you can see, gap, gap, gap. So I mean, if it fills 3 gaps, then your chart's all set up correctly. See the resistance down, boom, boom, boom. We see it bounce here, rejects. So the next thing we look for, this thing to come back down to 37. It's not going to fall to this resistance. It's not going to go way down here. It'll fall to this resistance. Or this was the best entry because you could see it's a double bounce. And we always enter on a double bounce. Missed this trade, but double bounce run. If it falls down here, it'll be this line, be a different line. So this would be the double bounce. And then we can look for the longer play. ER is coming up, and you can see that recent ER shows this stock is actually bearish. So we can see this thing run, and then it'll probably hit the cloud and jump down for ER. But I don't actually use indicators. Indicators are basically for people who day trade. Indicators are best for day trading. Swing traders, they use this analysis that I showed. I hope this video helps you guys. If you want to know more about technical analysis, check out my course, link in the description. Also, I have a free course for beginners. It just shows you basically how to trade, a little bit of technical analysis, and just how to set up certain types of trades. Hope you guys all have a wonderful rest of your day, and I'll see you in the next one. Peace out, guys.